Welcome back to AWM Insights, which is a quick hit each week on a timely investment topic to help you maximize your net worth. As you know, I'm Brandon Averill, a partner with AWM Capital, and I'm joined again by AWM CIO Justin Dyer. We got a lot of questions in last week, Justin. Our topic of inflation we thought was a real nerdy, turned out to be a really good one, and we got a lot of questions around it. So I'm excited to jump in this week, clarify some of those questions. We made some statements around inflation last week, and it definitely is a confusing topic. So we want to lay it out so everybody understands where we're coming from.
Yeah, and we'll wrap it up with the topic this week, so hopefully we don't overdo it. But one of the main questions that came in, or the themes rather, was, we said inflation would likely be higher over the next 10 to 20 years based on what the Federal Reserve has been telegraphing out there in the markets and changing within their policy framework, and whether we were happy about that. We don't predict the future and can't really say that will actually happen, but as we also mentioned, some level of inflation is definitely healthy for the economy, or a signifier of a healthy economy. We don't want to see it to go too high, but a level of inflation higher than what we've seen, say, over the last 10 to even 20 years would be probably a good thing for the economy as a whole. So are we happy about it? If that actually happens, probably. We also don't want to see it go too high as a result.
Yeah, that makes sense, Justin. I think the other thing, right, is from an investment standpoint, though, this inflation input is going to change how we plan for clients. And, one of the questions that came through was, so what are you going to do? Are we changing our portfolios? Of course, we're not going to change our portfolios. We know that having a plan and sticking to it is the way to go. We can't predict the future. We can't time these things. We don't even know when inflation might show up. So it'd be foolish to kind of go in and start altering portfolios. However, we do have to have a good understanding that this might mute some investment performance over time. And so really where it changes is from a planning perspective. And I think, it really highlights for us the way that we go about planning for our clients, because we're putting those protective reserves into place based upon inflation. Make sure that we have really safe investments that are going to provide for those needs that are in the short term or even in the future that are kind of those basic necessities. And we have to adjust for inflation there. And we use special vehicles to do that, obviously. But, really making the broad statement that we're going to predict inflation going up and the Fed's going to allow this thing to run hot and we're going to change things. To me, it still doesn't necessitate a change in the portfolios.
Yeah, it's an interesting conversation for sure, but to your point, it doesn't necessitate a change. And it's important to underscore that we build our portfolios to withstand various market environments, including those where inflation may be a little bit higher than what we've seen in the past. As an example, we have exposure to what are called Treasury inflation protected securities for the most part across portfolios. We also generally favor the value oriented side of the market, which tends to do well when compared to growth stocks within an inflation environment. So the portfolios, again, are designed to withstand many different environments, but specifically to inflation, we have areas of the portfolio that definitely respond positively should inflation tick up here.
That's great to know. Yeah, I think just a reminder for everybody, hopefully to simplify it a little bit, is that inflation could come, deflation could come. We're going to protect that part of your portfolio that is obviously the area that you need for your immediate needs, your short-term needs, or your long-term just basic necessities. And we're going to protect that with inflation protected securities and bonds and vehicles of the sort, and not to jump too much to conclusions. And we're not going to try to predict things for you, but we're going to take the same planned, measured approach that we typically take. So with that, we're going to wrap today's show up. Again, we thank you so much for listening to AWM Insights. Our production team got on me because I can't say www. So if you want to listen to more, go to awminsights.com. You can subscribe to our newsletter and certainly grab more information there. And then additionally, as you know, if you enjoyed this podcast, it would be hugely helpful for you to go over to wherever you're listening at this episode, leave a review for us, helps everybody else find us, get this information out there. And with that, we'll see you next time on AWM Insights. And we'll close with, as always, stay humble, stay hungry, and always be a pro.